I guess I have to turn the mic on, huh? Yeah, I got got things going on all over the place. Hang on, I just had to move that over there. That's all. All right, so hey. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of helping us plan our trades. Okay, why would you want to do that? I don't know. Because it's fun, it's cool. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Therefore, please always stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, how you doing? My name is Wayne. I'm a currency trader just like you. Been doing this for 20 years, and I still am, passionate about it. I'm still very interested. Like, think about it. I was geeking out on an OPEC report yesterday. Geeking out. I'm like, this is awesome. Yeah, weird. I know, right? But anyways, if you're truly passionate about this career, you're looking for more to do. You're not trying to cut corners. You're not trying to find an EA to do all the work for you. Why would you want to do that? You like doing the work because it's your way of creating value, of shaping your opinions and your biases, and then you have a reason for taking your technical analysis. So anyways, that's me. What are you up to? There's a poll there. It's asking you to fill out the poll. Let me know what currency you're trading, and I'll do my best to cover what you need. Let me know what you need. How can I help? We'll go through we'll charts, we'll do gold, we'll do oil, we'll do Bitcoin, we'll do S&P 500, we'll do dollar pairs, maybe we'll take a look at some yen pairs, maybe we'll take a look at some cross pairs. Let me know. In the description below, you will see a link to my book on Amazon.com. If you've already read it, would you please leave a review? It'll help, because I am beginning the process of starting a new book. So, hey, leave a review on the old one, would you, please? Also, in the description below, you'll see a link to fxbootcamp.com. There's dozens and dozens and dozens and dozens and dozens of hours of real training, like hardcore training, that you might find helpful. There's also live groups at fxbootcamp.com. So the link is down there. Also, if you want an ECN or a straight through processing broker that will just take your trades and put them into the interbanking system for you and not trade against you, the link in the description below is to tradersway.com. And I believe them to be a trustworthy, ethical foreign exchange broker that offers ECN straight through processing. Cool. So click the link in the description below. If you're like, Wayne, I don't want to click the link. I think you're going to track me. I think you're going to cookie me. Don't, right, Wayne? You're going to pixel me. Well then, bro, don't click the link. Just go to tradersway.com. And here we are. Ahmed says, hey, thanks for doing the off-topic real estate discussion yesterday. My pleasure. Like I said, I've studied a lot of different things in my life. I've done a lot of different things in my life. So, yeah. I can't wait to get together with you guys and do, I don't know what to call it. Is it a mastermind group? I've been getting a lot of promotions for mastermind groups, and I'm like, is that what I'm starting? But this idea that we can get through and we can look at term sheets. We could look at tear sheets, one-pagers from a whole different range of hedge funds. That kind of stuff. Go look at that kind of angle of trading. There's a lot of off-topic things. So, like, wouldn't it be interesting to go through a disclosure document for a Forex-related hedge fund or managed program, but also look at the one-pagers and compare one-pagers, this fund versus that fund? There's a lot of cool things we should be doing beyond just technical analysis. But anyways, let's get on with it. Thank you for completing the poll. I appreciate that. Let's see what's on your mind. Euro. Yep, Euro's pretty strong. We had a discussion. Well, no, we'll do that some other time. I'll cancel. I'll cancel. I'll cancel that thought. All right, let's take a look at euro. Okay, euro dollar 4 hour. So you might think euro's strong in the moment, but we're rising into a sell zone. What do you stink? What do you think? You see it? Delete. Okay. Look. That's resistance. You got to be careful. Even if you're a bull here, be careful. Okay. So let's just quickly, I just kind of skipped a step. Let's just confirm here. Okay, euro's strong. I'm just trying to show you that, right? In the moment, euro's strong, but it doesn't have to remain strong. So then when I go back to this setup, okay, Euro versus Aussie, for example, is bullish, but we're in a price action, you know, how do you just say it? Not a good place to buy. How about that? At the very least, not a good place to buy. So you got to be careful on that one. Taking a look at Aussie versus US dollar. Well, Euro versus US dollar. US dollar has been currently in a period of weakness, and so it's doing okay now. Notice that the buy is here. Okay. So now it's sort of, it's a bit on the late side, I would think. Okay. You're kind of thinking like this over the next couple of days if you're a bull. Yeah, just a little bit late. That's all. Just a little bit late. I noticed that this is set incorrectly. Let me change the biased pivots to a bullish mode. Okay. There you go. If that's helpful. Okay. Okay. What else do we know? Let's take a look. What do we know? Okay. This is the best buying pivot of the month. Man, it just at the beginning of the month as well. Just to also be clear, this is the selling pivot. This is the selling pivot. And so for us to breach above that, first of all, kick off the buying pivot, breach it, and then kick off of it again. Normally, this is the target. We've cleared through the target. My next target for euro, would you like to know? My next target for euro dollar longs? Let me tell you. Let me enjoy my coffee first, huh? Gee whiz, demanding. There we go, 105.5. Let's call it 105.55, bruh. Okay, so the next move, I don't even know how to draw it. I guess just kick off of here and get us to there. What do you stink? Smell like a plan? Does anybody else have a different number? That's the projected high for this week. And I'm guessing this month. Guess meaning that's what the charts would indicate. Yeah? No? You know, take this watch off. That's your plant? Cool. I haven't worn that in a while. Just sit in there. All right. So what else we got going on? Swissy. Well, let's make sure we got everything on a 4-hour. Yeah, everything's on a 4-hour. Okay, technically this is sort of bearishly neutral, neutrally bearish. Okay, because of the 2155. On this angle, this is still bearish, but already covered that one. Euro Noki, okay. How would you describe this one? Well, consolidating, but you know, if you were to kind of notice, if you're trying to connect these lows, you can see that we're now doing something like this. So there could be a change in direction here. Okay. I kind of see it in the moment more like this. Okay. So I see it rangy, but you can see that currently there seems to be something going a little bit to the upside. Right? You see that? What else could we look at on this and try to read here? You can see now that I back further out how I can kind of look at this a little more sideways, right? That's kind of how I look at it. Let's do it this way. I kind of see it like in a range here. So one thing you could do is let it break, catch the pullback, long and gone. If you believe euro is going to be strong. Now, I think euro would be strong only if the US dollar continues to be weak. And it can be. For a bit, right? You see that? And that gets us to a top, and then maybe early to mid-December, we bring this back down. What do you stink? You guys are quiet today. What's wrong, Bubba? You okay? So that's your euro. See what else is going on in the world. Just enjoying the snow. Oh my goodness. Okay, Aussie currently is weak. Okay. So we'll take a look at that. By the way, did you watch the Trump speech last night? He's a character, huh? He's like, very smart people told me not to say this, so let me tell you. Yeah, no, it was pretty good. Some of it was a little convoluted, but you know, it's fine. It's totally Trump. He says, when I met with President Xi, I said, Xi, you have a drug problem. President Xi says, we don't have a drug problem in China. He said, well, why don't you have a drug problem in China? He's like, we have quick trials. What's a quick trial? Oh, we arrest you and convict you and execute you the same day. Oh, he's like, so if you reelect me president of the United States, I'm going to execute drug dealers. It's just same day if possible. It's so funny. Yeah, quick trials, right? Made up quick trials. So anywho. All right, so that's that. Let's zip over to the buck. So look, Australian dollar is weak, but Aussie dollar is going up, so USD is even weaker. Very nice. Yeah, so that could be good for your commodity plays, huh? So anyways, we're trying to climb up above this. This is what we did in the day trading group a couple of days ago. And you might remember a different currency pair looked just the same. I think it might have been euro dollar. Like buying it now, you're a bit late, but look, you had the opportunity in the past. Pachow. Okay. And now it's going to work or it ain't going to work. We don't know. Buying it this late gets, it becomes more of a 50-50. Right? Because it might do one of these things, but because we've sat here for a while, well, maybe it collapses, right? And now you're getting yourself into a 50-50 bet. I'll bet you anything this goes up. Okay. Okay. Maybe your trade here is kicking off the hourly 21. Sure. It's also the day trade for day traders. That's just a basic day trade. Okay. Yeah, Darko, we tried to wait for you, but eventually we just had to hit the go button. Okay. Yeah, donuts are, well, there's a half of a pink one with birthday sprinkles, but. All right, so then we zip over here, and we have not breached the lower low on this one, like we have on some of the other pairs. Notice on Sunday, by the way, when the day trading group met, we knew we were in area of concern. Okay, area of concern. And of course, our concern was, well, it ends up going back this way, even though there wasn't really sort of a short-term fundamental reason for it. So I talked instead like, you have permission to try this. Okay? Even though if you go back through the entire year, there might have been only one other time this year where I kind of gave that permission. Right, Roger? So that's kind of interesting. It's held. It's doing its thing. It hasn't reversed. So I'm watching the moving average very, very closely, because the pattern that, if you got rid of the monthly, the pattern that is sort of repeatable here is it's more like there's a big move, it waits for the moving average to catch up, and then it pops to the next drop. So I don't know if it's going to do that. This is what the chart says. Okay, that's what the chart says. But I know in situations like this, meaning based on the fundamental news we had, this is more likely now than typical. So you're like, well, Wayne, which one is it? You're talking both ways out of both sides of your mouth. No. It only sounds like both ways because you haven't made a decision. It's one or the other. If you're a bull, it's too early to buy. If you're a bear, you're kind of already late, but you need to start thinking about getting bearish if you're going to be a bear. Now, if you haven't done anything, it's because you're neutral. And you're like, Wayne, I'm always neutral in this zone. Yeah, well, good. That's a decision too. Staying in cash is a position. Okay? Yeah, Darko's on his keto diet. He licks the sugar and frosting off the donut, but he can't eat the donut because it's bad. So if I want to take triggers like you limit order, breakout, retest, 15-minute time frame, am I deciding to take? That would be. I'm not quite sure what you're saying there, but you could do it this way. If this breaks low, can you throw down a limit order here for a sell? Yes. Yep. Because it would do one of these things. Bip, bip. Okay. I just noticed you're not quite getting, there you go. Roger says, Wayne, I have a question. How can a currency be converted into a reserve currency? You sell your currency and you buy the US dollar. Okay. Now, that's what you said, but I'm not sure if that's what you meant. So I think you meant, how does a currency become a reserve currency? Okay, Monday, I'll come back to that in a second. Yes. People choose to use it. Okay? So, let's go back several hundred years. The Dutch and the Portuguese are competing with global trade. The Dutch and the Portuguese are making really good ships, and they're outpacing the Spaniards. So their ships are better. They can go farther. So they work their way towards India for trade. They go into a port town, and the port citizens have to decide what currency to trade with the foreigners. How do the foreigners decide what currency to keep in their vaults? Because remember, right? Like the Dutch, for example, will only accept guilder if they're selling Dutch products. Okay? So, it really comes down to the citizens themselves, because, how you say it? They have to choose what currency they think is most important to keep on hand. And that usually is an economic decision. I mean, it's always an economic decision, really. It comes down to, who do they want to trade with the most? Maybe the Dutch show up more often. Maybe the Dutch have better products. Okay? Maybe the Dutch send 5 ships a day and the Portuguese only send 1 ship a week. So eventually what happens is all the business transactions in that port now start to get done in guilder. And in this case, let's say if we're talking about India, the port in India So what? Goa, Mumbai, they decide to keep the gilder they have on hand in anticipation for the next ship to show up. Okay? And they want to buy the stuff that the Dutch have. So they're keeping gilder, and when they can buy more gilder in the foreign exchange market, so maybe they send an envoy to Holland and they buy a bunch of gilder, literally just buy it, so that they can have it in Mumbai. So as the ships keep coming in, they'll have the gilder to buy the stuff, okay? And so what I'm trying to say is there is no law. There isn't a mechanism to force it to happen. These are banks, in particular central banks and business people, that decide to keep certain amount of currency on hand in reserve. Now, you can have multiple reserve currencies, but it gets to the point where you're starting to price everything in that currency. Okay? And everything gets priced in that currency because it's the most important, right, to you. So anyways, so that's all it is. Nobody is forced to hold US dollars at their central bank, but the central bank chooses to. And also nobody, I mean, they kind of are, but they're kind of not forced to price oil and other commodities in dollars. They kind of are, they're kind of not. You're not forced to shop on Amazon. You choose to shop on Amazon. Okay? And there's a host of reasons why you might choose it. Okay? So that it's just a choice. That's all it is. It's just a choice. But the reason I bring up Amazon is there's this network effect. You don't leave Amazon because it's the cheapest and they have fast shipping and they have a bajillion products. So a startup that enters the marketplace can't be cheaper than Amazon because Amazon already has 1 billion products and the startup wouldn't. They already have 1 billion customers. The startup doesn't. They have hundreds of billions of dollars in cash. The startup doesn't. So it's really hard to get in. Everybody uses Amazon because everybody uses Amazon. And because everybody uses Amazon, there's no other reason to leave Amazon, so you're always stuck on Amazon. Or you're always stuck buying products from Apple because you got the iPhone, and therefore you got the iWatch, and therefore you got the iTV, and you got this iTunes, and all of a sudden you're doing everything on Apple. Meanwhile, I got a Android, and so I got this, and we're in two separate worlds. You keep your Apple as a reserve currency. I keep my Android as a reserve currency, right? It's a choice. And it's going to be very difficult for like Windows to show up and say, you should have a Windows operating system on your phone, and you should have a Windows operating system in your car, and you should have a Windows operating system on your watch, and you should have a Windows operating system on your TV. And you're like, nobody, like, but why do we have Windows operating systems on our computers now? It sucks. Why don't you switch? The switch is difficult. And you're like, well, I already have an Apple. Okay, great. So now you're on Apple, but what if I don't have Apple on everything else? Now I'm stuck with Windows. And then you're like, well, Linux, right? Well, not quite there yet. So anyways, there's a network effect. It's very difficult to switch. So once you have a reserve currency, it's a reserve currency because everyone else is using it as a reserve currency. So it's your reserve currency. Again, why is it your reserve currency? Because it's everybody else's reserve currency. And it'll be that way until there's a collapse in one and a significantly better option in the other. And we're not there quite yet. Okay. All right, let me go back to Monday's question. I am framing trades on the 15-minute time frame on a higher time frame. Which one is most important? Well, I will always say, Monday, every time frame is important. Peter says in 5 to 10 years we have no reserve currency anymore. I'm not ready to go there yet. Okay, I'm not ready to go that far. But the maturity of the US dollar, or I should say the US economy, would dictate that likely in the future, right? There, in the reasonable future. I don't know about 10 years, but let's say, how about this? In 50 years, there'll probably be another reserve currency. I think we'll move into a period of 2 reserve currencies and then 1. And eventually, the one that remaining will probably not be the US dollar. And it's no shame to I'm not poo-pooing on America. It's just, it's run its course. There's always a situation in which the reserve currency goes through a cycle and we're at the downward sloping part of the cycle and something new is coming soon. But the thing is, there is no replacement yet. We're not even close. So that's the thing. People may be worried about the U.S. economy and U.S. politics and U.S. society. All of that is true. Okay? But the replacement is, the choice is worse. Okay? Now, Peter says, hey, so there won't be a need for a reserve currency. No, there is. There's always a need. That's why we have a reserve currency. So even if the reserve currency sucks, Peter, there's still a need to have a constant pricing mechanism. All you need is a bridge currency. That's what a reserve currency is. So it doesn't matter really. It's how much does a barrel of oil cost? And you have a reserve currency because having 5 prices is just too difficult, too complex. It's just, especially in a world where you have to understand oil is fungible. It's literally liquid, like a currency. It's fungible. Nigerian oil can be bought and sold all over the world. We can move this stuff around. It's really cheap to move around. I mean, it's so cheap to move oil around, it's practically free. Okay? So, right? So, in the global trade of, let's say, 100 or even 200 countries buying and selling oil, there's this idea that there's a law of one price. Okay? There's because oil is so fungible and so easy to move around that all arbitrage opportunities get arbitraged. So this is the idea of efficient market hypotheses. In most situations, I think the markets are inefficient. But in something so global, so ubiquitous, and so fungible, that it's the closest thing we have to an efficient market. And any inefficiency will very, very quickly be priced out. For example, and I covered this in the oil trading course, where a ship could be leaving the Middle East on its way to Holland, right, to the Netherlands to be offloaded and then, refined and then sent throughout Europe. And there's a contract for that delivery. But on the way, prices change around the world. And suddenly, it's a little bit better of a deal to send the oil somewhere else to collect $1 more. But in the meantime, that delivery was supposed to go to Holland, but the deal could be sort of renegotiated so they get their oil, but it'll end up being a better deal for the Dutch. Meanwhile, this current oil, while midstream, like while it's at sea, gets diverted to the new buyer. It's like that fungible, like it's on the boat scheduled to Holland, and all of a sudden it's going to the Gulf of Mexico or whatever, right? It's just diverted, and another ship is going to go to Holland, but they'll get a better price. They'll be happy. Don't worry about it. And so one is short and one is long, and you get a new price, but that ends up being the price globally. Everything is automatically arbitraged out through these contract negotiations that happen 24 hours a day, 7 days a week. It's how the world is working. Okay? And because the oil is on a ship and not a pipeline like gas, that could happen all the way. So somebody just calls up and says, okay, your oil is going to come in a day late, but you're going to save $1. Meanwhile, they're going to take the tanker out there and sell it for $2 more. And then it gets, now there's one new global price. Okay. So to do that kind of contract, remember, every country in the world needs energy. Okay. So it's ubiquitous, and we can pretend oil is oil. Of course it's not, but let's just pretend it is. Then it's the closest thing to the law of one price. But now you don't want to have that global price in oil in 5 different currencies. You see? Because now those 5 different currencies are also in real time moving and changing. And not just today, but the future price. So you're like, okay, I want to take delivery of this oil in 3 months or 3 weeks. And now you got to like hedge the change. Like, well, should you do it in euro? Should you do it in pound? Should you do it in yen? Should you do it in dollars? Should you do it in Swiss franc? And now you got to like pay attention to all these. And then you got to hedge all that out. And all of a sudden you're quoting 5 different prices for oil. And you know what? The world doesn't want that. So again, I'm not sure, right? I'm not sure, Peter, if you're just saying like the dollar sucks and that's going to be it, and it needs to be replaced. That may or may not be true. I'm not agreeing or disagreeing, but the reason we have a reserve currency is people just want to know the price. They want to buy the oil. They want to know when they're going to take delivery, and then it's one hedge. Ching, they hedge, or they don't hedge, and it's done. And there's just one price, one currency for the oil, right? Now, Peter, if you say, well, US dollar sucks and everyone's just going to use XRP, good. It's the same thing. That then becomes that's what a reserve currency is. So you're like, no, they'll just bridge, they'll have some other intermediate currency in between the process of buying and selling. Well, that's what a reserve currency is. You just defined it. And the world has chosen that to be dollar. And not just, the US because of its big military or its big economy, but those who are selling it could just choose something else. OPEC today could just choose to sell their oil in multiple currencies. They can make that choice. There's no law. Tanks and bombers are not going to roll into Riyadh because they decided to accept a different currency. Now, we did that to Iraq. That's a different, right? That's a different animal. You know, it's not, right? That's not why they make that choice. But nonetheless, they make that choice. And it doesn't matter good currency or bad currency. It's the currency they choose. Right? Now, there's also like, well, why not accept the Chinese currency? Well, first of all, it's not free floating. Foreigners can't just buy it. So then you can't just buy the floating renminbi at anywhere at the market price. There is no market price, onshore, offshore. No. The reserve currency is a global currency. Did you know there's way more US dollars outside the United States than inside? Like way more. 1,000 times more dollars. It's one reason why it's a reserve currency. Dollars are used more by foreigners than they are used by Americans. That's why it's a reserve currency. So you can't use the Chinese renminbi because you can't even really just buy the stuff. It's not just everywhere. It's not ubiquitous. It's controlled. It's not free market. Okay? And the bond market in China is not liquid enough and they're not mature enough. And the legal system is still becoming, more open. And, like China will probably, if I were to guess, China will probably have the reserve currency. But like I said, not for probably 50 years. Now, Richard says China has a lot of it. Japan has more than China. Okay? So anyways, thank you for the discussion. Okay, thank you for the discussion. Let's move on to the charts. Lastly here, for the pound, we're just caught in the middle here. Okay, we're just caught here where we're trying to do like, it kicked off the 21, pulled back, and we're just farting around here. And it's a danger zone. That's why we're not going anywhere fast. But that's the idea. If it goes up, I'll make money. If it collapses, I understand, and I just don't want to be long this. I actually don't really want to be long this. I just know based on seasonality and the change in sentiment on inflation that dollar is weak. That's all. And so when I even took this trade in the day trading group, I'm like, I don't even really want this. I'm just going to buy it because it's going up. I talked about it as dirty money. Okay. Okay. Dirty money. But it's okay. It's okay. So you can see nice little roll reversal. And we're still above the 4 hour, but it's going nowhere fast. It's quickly going nowhere. So, we just kind of carry that out. If you're using price action here, this is an interesting price. Okay, look at it on a higher time frame. Oh yeah, going back to the time frame question. Okay, should I use the daily? Yes. Should I use the 4 hour? Yes. Should I use the 1 hour? Yes. Okay. How do I feel about the FTX saga? I don't care in the slightest. I know everybody on Twitter wants to tweet about it. Now it's FTX or Elon Musk. I don't care. Okay. So if you lost money on FTX, it's terrible. I'm sorry that happened to you. When I see the CEO, and then what's the other one? Alameda Research. And I'm like, really? Huh. Okay. Yeah. Okay. So I don't wish any ill will to anybody. So if you were crushed by that move, I remember when we were at $20,000 on euro, I said, why not 10,000? I didn't know FTX was going to go out of business. Well, I bet you Gary Gensler is going to get more power to regulate, and that's probably a good thing. Lots of politics behind FTX and the CEO? Sure. Look, I'll put it this way. The federal government specifically put $5 trillion of cash, not credit, cash, into the market. What did people do with it? The vast majority spent it on food and beverage. Some people started trading meme stocks. And then they started buying crypto. We need to destroy that $5 trillion. Some people literally pissed it down the drain. Pardon my French. And now, if they blew up their crypto accounts, if they blew up their meme stock accounts, good. We needed to destroy it because it was BS money anyways. We need to remove the money from the economy. We do. Raising interest rates only destroys credit. It will not remove the $5 trillion. So I would rather people lose their FTX accounts. And I'm talking about the economy now. Don't get all mad at me. Don't get mad at me. Try to listen. The money didn't exist before, and now it doesn't exist today. Okay, so if you got the money for free and then you lost all the money, nothing actually happened. But I'd rather somebody lose their crypto account than lose their house. Okay? Right now, okay, when the money came out from the government during COVID, American savings rates skyrocketed. And for the first time in many, many years, Americans had money in their bank accounts. Well, many, many Americans spent it. Many, many Americans leveraged it. And many Americans don't have the money anymore. Not only are we back to a negative savings rate, but according to the Fed yesterday, credit card debt is at an all-time high or approaching an all-time high. Interest rates on the credit cards are at approaching an all-time high, or at least generational high. And car loans. Can you believe this? Car loans are going to outpace student debt. See, at least student debt means you're investing into yourself. And maybe, just maybe, arguably, you're going to go out and get a better job and increase productivity for all of society because you're smarter because of your college degree. Okay, maybe we can argue that. But people don't have money. They can't afford a car. And if you've ever been to LA and specifically, your car is your identity. So you might got no money, but you got to have a nice car. Okay? And so Americans now are borrowing money, probably 7-year loans now, to buy a car. Oh my God. That is the single worst thing you could possibly do with your money. But wait, they don't have any money, so they're borrowing. Oh my God, borrowing money to buy an asset that is guaranteed to lose value. How would you like to borrow money to buy Bitcoin if there was a 90% chance it was going to lose money? I mean, how about this? 100% chance. That's the thing. It's 100% chance. Okay? Your Hyundai Sonata will lose money. Don't borrow to buy a Honda Sonata. Well, I don't got no money and I need a car. Get a bicycle. Take a bus. Oh my God. Think of it now. There's going to be more debt for cars than education. Now, education shouldn't be as big, but borrowing money for a car, oh my God, oh my God. Okay? Now, you'll say, well, Wayne, you told us to borrow money 3 years ago to get your cars for free. Yeah. Money was free. Do you remember that? I did this back in 2008. I also explained how you can get a free Ford F-150. Oh, Maida, that's a great car. When money was free, okay, not long ago, you could go to a car dealership. You could get a 5-year car loan at 0% financing, or maybe 1%. If it was a fancy car like a BMW, you had to pay 2%. But if you went to Toyota, they were giving it away 0%. Ford, 0%. Okay? Now, here's the logic I gave back then. The stock market's going up 20% a year because of quantitative easing, but also because of quantitative easing, car loans are free. Why the hell would you use cash? That would be dumb. So you had a choice. 50 grand to buy a car. You can give up your 50 grand and you get a car. Or 50 grand for a car and the car company is willing to give you the 50 grand and charge you 0. They give you the 50 grand. You just got to pay it back. So you borrow the 50 grand for free. Meanwhile, you have 50 grand. So you put that in the stock market and it goes up 20% a year. More than enough to pay the car loan. You see? So at the end of 5 years, your 50 grand, right, has paid for the car. Do you understand that? That's when you take the money, when the money's free. The car is free. If you spend money on a car, you don't understand money. So now this is what concerns me. According to the Fed's report yesterday, people are taking out car loans that have high interest rates. So now you work for the car company. You work at your day job, and it sucks all your money out from your day job. And you financed the window tinting. You financed the upgraded wheels. Oh, my Hyundai Sonata has 19-inch wheels and tinted windows. And it's got a wing on the back. Couldn't be dumber with the money at all. Okay? And it's only 6%. Okay? Dude, think of it this way. Let's say a car loan's 7%. I don't even know what a car loan is. But let's say it's 7%. By the time you pay it off, you're paying, I'm going to guess on the math, a 5-year, you're going to be paying 50 or 60% more than the sticker price. You paid $75,000 for a Hyundai Sonata. Are you nuts? You're like, no, I'm not crazy. I just don't understand money. Okay. So anyways, that's scary, guys. That's scary. Okay? It's scary. Someone that understands finance will get their money, will get their vehicle for free. People that don't understand money become a slave to their car. And by the way, you have to work hard, and the car every single day is slowly breaking down. Okay? Okay, Hope says, okay, why not use Turo? Okay? Get a used Tesla for $600 a month and then rent it out for $15. Hey, do whatever you got to do. Okay? Sure. But guys, money is money. Money is money. Choppy day. Yeah, I think so. So anyway, so we're above this, but we're below that. So, and this is the next level. Hope says you got to have electric. Well, I would say, based on a conversation that I had a couple of days ago, if you're going to buy a Tesla, you should buy it soon. Right? I would recommend getting the better batteries, the best battery you can get, even if you buy a pre-owned Tesla. Get it soon, get the better battery. If you're buying a new one, probably in the next couple of years, 2 or 3 years. But I'm worried that in 5 or 6 or 7 years, we won't have the capacity globally to make batteries. You know? And all of a sudden, you won't be able to get a Tesla. Okay? And maybe to contradict myself, because I love doing that, the value of your Tesla skyrockets. Because Tesla can't make new Teslas, so everybody wants to buy old Teslas. Maybe. I don't know. Because you can't get batteries. I don't know. Okay. Okay, we're back below 85 in WTI. Okay. Gold coming down a little bit. I have to update this because what it looks like now is top. And that smells like a rollover to me. So that could be lower low, lower high for a bit. US dollar strength. S&P 500 coming down, but it's in a buy zone if you're a buyer. It's not a great buy zone, but it's a floor. It's not great, but it is. What is it? We hit the monthly resistance. Okay? That's all it is. So it looks and smells like risk off in the moment. What kind of trades could we make in a risk off moment? Monday's like, hey, back to the charts. What are we interested for tomorrow, Wayne? What levels for intraday? Dude, why don't you join FX Bootcamp? You're asking me to do the work. Hey, this is what we do all day, every day at FX Bootcamp. You should probably join one of the day trading group. Feel free, join. We'll break it down every day. At the end of the day, we set up tomorrow. Okay? I'm trying to teach you how to think and organize, but if you want more specifics, if you want that kind of, drill down, you need to join FX Bootcamp and ask there. Okay? Okay? What are tomorrow's trade levels? That's a very basic question. So you should join FX Bootcamp and learn, and then join the live groups and ask there. Okay, buy dollars. What else, guys? Shorting gold, sure. What else could you do in a risk-off moment? Risk off, guys. Risk off. What would you do? Romano went through boot camp and took his first trade. Very nice. David says, Wayne, do you journal? 1/3 of my book is about journaling, David. Wink, wink, nudge, nudge. How do you recommend making one? That is 1/3 of my book. How to journal properly, because most traders don't journal, and the ones that do journal don't journal right. They're just putting down statistics that their trading platform will do for them. Okay? Buy the book, leave a review. Like literally, there's like 100 pages I wrote down to answer that question. Okay, cool. So that's that. What else? No, you guys are too busy trading then, I guess, right? Right. Well, why don't we look at a trade like that? Is a risk-off trade, isn't it? So on this 5-minute, we're approaching a double bottom. So let me switch this out if we're going to do price action. Whoa, wrong stops. There's no stops on that. Wow, that's weird. It's freaking out. Something's really having trouble on this template, but nothing on that template should be happening. Interesting. Yeah, I think it's for some reason. I'm going to kill that. I think that's... There must be an EA on one of those templates that I've forgotten about. So anyways, it was freaking out. So anyways, riding to 5 here. When is the next book coming out? Well, then when is the new book coming out? I don't know how long it'll take me to write it. I know what I want to write, but... Yeah, 35 trades placed. Okay. So anyways, I'm just riding a 5 here in a risk-off day. Can you see what I did? Okay. Lower low, lower high on a roll reversal. Right. Yeah, David. Yeah. News is different for sure. Risk off. Let's do, what should we do next? You want to do the exotics next? So I'm still farting around 500 pips. I only have 4 trades open, so I guess that's okay. But I've been at 500 pips for like 2 days now. It's not right. I think the highest I've been is 650 pips. So it's just farting around, up and down, around, going nowhere fast. But I'm collecting carry. So like, let me bring this back up. I now have a 22% return on investment, or IRR, just in the swap. You see that? I invested $100 of my cash and have made $22 just in interest. But of course, I have $300 in profit. So I have an internal rate of return of 322% on that trade. Oh, nice. Good, great, fine. Now there's a bit of interest with a new currency available at Trader's Way. I'm going to pull it up, and it's a high yielder. So we can try it if you want. Now, high yielders sometimes have more volatility than others. I'll thank Darko for pointing it out because he's doing very well trading it. I'm going to bring that here. And there's the volatility I'm talking about. Let's put this on a sort of a standard template. And I'm going to look at it in euro. And this is the Polish zloty. Ridge says, my broker doesn't pay interest. Oh my God. Oh my God. You know what they're doing, Ridge? They're collecting what is deserved to you, and they're keeping it as revenue. The money you're supposed to be earning, they're pocketing you. But unless you have an Islamic account, okay, that's fine. You don't want to earn interest. But the interesting thing is, if they don't pay, you probably have a double. They're probably charging you both ways. So I'll show you. Let me show you how to check. So when you open this up, so we have Euro Polish zloty. Okay, and I go to specification, and see if I'm long at 5 p.m. Eastern time, I pay interest. But if I'm short at 5 p.m. Eastern time, I get paid interest. Okay, and it has to do with interest rates and various other costs in Europe and in Poland. So what this tells me is interest rates are significantly higher in Poland than they are in the Eurozone. So if I'm going to do a carry trade, I only want to sell. And every single day, I'm going to get paid interest on the money that I put into the trade. And on Wednesday, I'm going to get a triple swap. So today at 5 p.m., I'm going to get paid 3 days worth of interest, even if I only traded it today. So this is the best day of the week for carry trading because you're going to get paid for Saturday and Sunday of last week. And you're like, well, Wayne, that doesn't make any sense. And I'm like, it doesn't need to make sense. It's just how Forex trades. There's a 3-day settlement. It's a glitch in the matrix if you want to look at it that way. Okay? Okay? Now the spread is a doozy. Okay? How did you open that contract detail? Let me do it again. Open up the market watch, select your currency, right click on it, highlight specification, and it tells you. Okay? So now look at, I get paid, let's say 41. 41 what? Well, with conversions and stuff, I don't know. Let's say 40 cents. It's not actually that, but we'll pretend the unit is cents. If I look at USD, Polish zloty, it should be less than 40 because it costs you more money to borrow the US dollar than the euro. Because that's what you're doing. You're lending Poland money. You're lending them euro or you're lending them dollar. It costs you to borrow euro and dollar, but Poland is willing to pay you a higher interest, right? So if I go to specification here, it's half as much. You collect twice as much money lending Poland euro. Why is that? You're borrowing euro to lend to them. So like in my case, I have US dollars in my account. I take US dollars and I use it as collateral. My US dollars don't leave my account. I use my US dollars collateral, and it allows me to borrow euros. Now I have to pay interest on those euros. I'm borrowing euros and using my $100 and for the mini lot as collateral. So I get to borrow $10,000 worth of euro. Great. Now I take the $10,000 worth of euro. So you have to convert now dollars to euro. And I lend the $10,000 worth of euro to Poland. Poland says, thank you very much. We needed the $10,000 worth of euro. So it's just slightly less than 10,000 euro, 9,870 euros. Okay. I lend that to Poland and Poland pays me because now I'm the financier. I'm lending Poland euro. They're paying me money. The thing is, I actually only have 100 US dollars exposed to this risk because of my leverage, and that's my collateral, right? So my return on, right, is not in return on investment, but internal rate of return, right? So like with these trades open, I have $1,150 of margin, right? On this one trade up here on USD Mexican peso, of that, it's $100. And that's why on my $100, I've earned now 333%. I have $333 profit, and I only have 100 of my dollars at risk. You see? So that's how you get an internal rate of return. On that one trade, the money I have at work, my $100, I put to work, I deployed the capital, and it's produced $333 in productivity. Okay? Now going over to Polish zloty, you can be the financier here and play it, but what's the cost of doing business? The cost of doing business here is very high because look at the spread. Now, you want to look at the cost of the spread. You also want to look at margin levels. Okay? And then you want to look at, sort of not just interest rate levels. There's other costs that are involved in calculating how much you earn in income. So you want to look at all of that. So like my USD Mexican peso is only $100 margin. The spread was really low. It's a very liquid market. So that's right. So this zloty market is not as liquid. So therefore, there's going to be a higher spread. So those are costs that you have to calculate in there. But like if I go back to that Euro Zloty setup, here it is. Okay, so you can give you an idea. It's 40. What's my USD Mexican peso paying? 17. Okay, so there's twice as much interest. Twice as much interest that you're going to collect every day than my Mexican peso trade. And I already have a 22% return interest only. So in that same period, if I had done the Euro Zloty trade, all else being equal, if we're just looking at how much income I collected through swap, I would have a 44% return based on income, not asset appreciation. Because you know my asset appreciation, I'm already up 300%. So which is more interesting to you? The income from your investment or the asset appreciation? Well, in the long run, both. On the short run, hey, look, 300% versus 22. Hey, I'll take the 300% anytime, any day. But if I can hang on to that trade for a year, it's 360% internal rate of return income only. So the Zloty trade, if I held on to a year, would be approaching 700% plus asset appreciation. Oh God, as Kanye would say. Okay. David says, with limits, I'm less bothered by spread. How do you? Well, the thing is, spreads widen at rollover or during periods of risk. You should know when those are approaching. If you don't, I mean, there's just more to learn. Okay. You need to know the risks associated with your trades, right? Global Investor says, that's incredible. You're incredible. You're unbelievable. Okay. Yeah, I was talking to a friend of mine running his fund, and he said, "So what are you trading?" And I'm like, "Oh, I'm buying up the peso." He's like, "Oh, he has peso too." So we were talking about peso just the other day, and he's been in his peso investment since I think he said April. Okay. And his returns are really, really good. And we were talking about it, and and it was funny because I congratulated him. I said, you have the appropriate level of leverage. Let me put this into context. You probably laugh at me, and it's okay. It's okay. You can laugh at me. This trading account has almost 40 grand in it, and I trade mini lots, and you probably laugh. You're like, Wayne, that's stupid. If I had 40 grand in my account, because most of you don't have 40 grand in your account. The average retail trader doesn't. So I don't know you, but let's just say the average doesn't. And yet they're trading probably multiple mini lots. So for me to trade mini lots on this account, it seems stupid. I trade mini lot, if this account had $100,000, I would still trade mini lots. Okay. I did a presentation in Toronto several years ago. How many years ago? I don't know. Many years ago now. Gee whiz. When was that? 2015, maybe? Anyway, so I was doing a presentation in front of a few hundred potential investors. And I explained one of my rules. because I was asked about levels of leverage because there was a lot of professional investors that were not used to Forex. And I said, well, they're worried about over leverage. I said, well, I use one mini lot for every $100,000 in cash. Now you might just like go, oh my God, that's so tiny. It's ridiculous, right? How do you make money only trading mini lots with that kind of cash? I have a lot of trades open and they're all running. That's the whole point. Scale, baby, not risk. The secret to success in Forex is not risk, it's scale. So anyways, so you might chuckle that I'm underleveraged. So I'm talking with my buddy here on peso trade, and we're comparing our peso trades, and based on his return, I knew he was significantly less leveraged than this coaching account. So I laugh because you might be laughing at me because I'm underleveraged. Well, I chuckle because I know this account is overleveraged compared to what a professional institutional investor would be doing. This is overleveraged. I shouldn't be trading mini lots. There's only 40 grand in the account. Okay? So anyways, just the points of view. It shows that if you think I'm overleveraged on this account, you should just imagine how overleveraged you are to an institutional investor. It might just be shocking beyond belief to them. They might just turn and run. So anyways, just, okay. Now in the beginning, I understand why you probably have some leverage, over leverage. Your trades lot sizes are large relative to your account size. Because in the beginning, when you don't have a lot of money, you need to make a lot of money. You need to make money. You need to grow your account. I get that. So in my book, one of the things I describe is over time, how to reduce that risk. So as your account size grows, the amount of risk per trade falls. But here's the backward sort of the logic here. There's a lot of paradoxes in trading. It's really, really interesting. In the beginning of your trading career, when you have the least amount of experience, least amount of knowledge, and the least amount of skill, you will have the highest level of leverage. And then later, if you happen to survive 5, 10, 15, 20 years, when your account is big and you have lots of experience and you have lots of knowledge, your leverage will be at its lowest. Isn't that a strange paradox? And once you're aware of it, if I were me, I would say, oh my God, I need to find ways to reduce my leverage. Right? For me, it's when I realized that consistency was the most important thing, and that time takes care of everything. The way to make a lot of money is low risk over long periods of time. And once I understood that, it was a game changer for me. It's only math. One of the first quotes in my book, and I don't know why I'm talking about my book so much, I guess because I've got this in my mind of writing new books, but one of the first quotes is from Einstein. He was being interviewed at a press conference. And he was asked, what is the most powerful force in the universe? Now think about it. I put this quote in for a reason. Does anybody know his answer? What is the most powerful force in the universe. Yeah. Did he say leverage? No. What is compound interest? Yeah, and the answer is compound interest. What does that mean? Small but exponential gains over long periods of time produces incredible results. So what does that mean? A small gain today is small. You're like, Wayne, I'm making 20 pips a day on average. Okay. So I want to jack up my lot size so I can get money fast. No, that's wrong. Okay. 20 pips a day with a certain lot size relative to your account size, if the level of leverage is low, will amount to not a lot of money. But let's say the percentage stays the same. Okay? Maybe it's $20 a day because you're trading a mini lot. Well, in a year, it will be $25 a day. In another year, it'll be $35 a year or a day. Another year, it's 60. Then 110. And then, right? 212, 400, 800. All of a sudden, by year 10, you're making $1,000 a day. By year 20, it's 40 grand a day. And you're so worried about making $200 now that you'll risk it all. I'm like, dude, you just threw away $1 million a year career because you're so focused on making $200 quick. Once again, if you understood the math of money, you wouldn't be making decisions like that. You're too small. You're not thinking big enough. It's scale. It's not speed. Speed kills in our business. How can I make more money faster? Well, the best choice in that situation is stop trading because you're about to lose. Okay? The secret to success is slow, methodical, consistency. And over time, the math of money takes care of everything. Think big. Don't think whatever the number is. What is the number? What are you trying? I don't understand somebody's logic of taking big risks today. I just don't. What are you trying to make? Oh, there's not even a goal, most likely. Right? They're not even thinking beyond the trade, yet the day, yet the week, yet the month, yet the year, yet next year, next 5 years. They're not thinking 20 years in advance. They're just throwing down money on this trade. It will not work. It will fail. Guaranteed 100% chance of failure when you trade like that. Okay? So, what if you traded like you were a business? Man. What if your trading was a business? And your business had a plan and pro forma cash flow statements? See, that's what I asked myself when I realized in my early days that I wasn't getting the results that I wanted. And that's a bullshit way of saying when I was having a horrific period after quitting my job, right? I ran into this slump and it was devastating psychologically. Because I threw away my dream career, my big money, right? My self-esteem tied to my greatness. And all of a sudden I was failing. And I'm like, I honestly, I didn't know the taste of failure. When I was 20, I was running a company of 3,000 people, sitting on the board of directors with George Soros. Like, dude, that's a pretty big win for a 20-year-old. So here I am, I don't know now when I'm 30, and I just leave my dream job. I'm the king of the world. And now I'm going through a devastating psychological failure. My Forex was not going the way I wanted it to. I was sucking. So I stopped. I'm like, what the hell is going on here? I'm a winner. Why am I losing? And I realized I didn't have a plan. I didn't know what I was doing. I was just trying to make a lot of money every day. So then I actually created a 3-year pro forma cash flow statement because that's what a startup would do. I'm the king of startups. So I'm like, oh my God. And that put me right back on track. Okay? You see? So the mental shift is important. Now, actually doing it is even bigger. To get to that point, though, to understand it's a paradox. Be mediocre because mediocre means you're not taking on big risks, so you can't have big losses. It's impossible. You're actually trying to be mediocre. Over long periods of time, you will end up with more than enough. And trust me, you will lower your leverage more and more because you'll have more than enough and you'll be more afraid of losing it than trying to get more. So you'll start lowering your leverage. And in that case, you've won. You're a professional. You made it, dude. Oil inventories came out. Yeah, we set those up yesterday, actually, so. Okay. There's your move, bro. Okay, we got it trapped in here. Okay. There's only two things that are likely here. A bounce at that zone or a break. So you got plan A or plan B. Easy. Darko says, yeah, make everything from joy. Yes. Like I was saying yesterday, reading that OPEC report brought me joy. Okay. Okay. And yes, praise. The answer was compound interest. Yes. Well, it's a hedge, Rajid. So that'd be great. You know, making money somewhere else, that's how a hedge works. Okay, Rajil? That's how it works. Okay? But that's what you guys are freaking out about? Wow. All right. Well, let's look at this. Yeah, you're in a buy zone. If you're going to buy it, that's the buy zone. I already marked it. It's also a 4-hour 21, which I've already pointed out. So it's like, do it or you don't do it. But yeah, that's boring. Yeah. Easy. Okay. Yeah, no, I know what you meant, Darko, but it is, your psyche will change as you gain more experience if you have the right kind of experience. That's why I suggest, again, very, very, very specific practicing. You have to practice very, 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 very specifically. I once asked a trader to do the same pattern 100 times in a row. Took him months to do it. And at the end of it, he knew how to trade that one pattern. And by the end, he was way, way better at predicting when the pattern presents itself. So he got better and better to be ready, willing, and able to take the trade. And he knew the vast majority of the time when the trade developed, because he also knew how to take the trade and anticipate the trade, the vast majority of the time he made money. And that's where confidence comes from. Okay. So if you knew that double bottoms with a higher high produce a higher low, and 78% of the time you make money, that brings you joy from your confidence, because you're like, there it is. That's what I'm looking for. And it's a much different place than trading with some doubt or fear or dread even in the back of your mind, right? And you're like, all right, I'm going to take this trade. And there's, 30% doubt hanging back in your cerebral cortex, right? And you're like, there's a different type of stress. One sort of, it's different endorphins. One's a stress endorphin, one's a pleasure endorphin, right? So that's why I say to people, just trading in lots and lots of trades is not going to make you a better trader. You need to practice being consistent. You need to practice being in control. And it's like doing what we used to call a hammock trade, right? 100 times in a row. Do you understand how disciplined you are to only do that one trade 100 times in a row and measure it, the success of it? The patience to wait for them and the discipline to only do them. And at the end of it, you do your math and you find out you have a high winning percentage on those. That's where your confidence comes from, your patience and your discipline and your consistency. So then you got that knocked down. You're like, I'm an expert at that one pattern. Add a second pattern. You at the end of the 1 year, you might only have 3 patterns in your repertoire, but I bet you it's enough to be profitable. And my goal is get you profitable enough that 10 years from now you're still trading Forex. Because imagine how good you're going to be in 10 years. Well, if you suck this year, you ain't going to last 10 years. And I'm talking to everybody here, right? I'm talking to everybody. So the number one goal is, and I did this in my business planning retreat. I'm like, oh my God, I only need to get to year 3 being mediocre every day. And at the end of 3 years, I'll hit my target. I just need to be mediocre for 3 years. I just need to be able to do this for 3 years and the math will take care of itself. I need to do whatever it takes to survive. You see the different mindset? That's what matters. Year 3, year 5, year 20. The money will take care of itself. And for everybody else, they'll borrow money from Hyundai USA, 7% a year, and buy an asset that will lose 20% the moment they buy it. And a year later, it'll lose another 20%. In 5 years, it'll be about 80% depreciated. 80% depreciated, and you're probably still paying off the loan. Oh, God. So 5 years from now, your $50,000 car cost you $75,000, and now you could sell it for about 10 grand. You paid $75,000 for an asset that will be worth 10 grand in 5 years. And in another 5 years will be worth 3 grand. What? You bought an asset that went from $75,000, which is your cost, not the value. That's what you're willing to pay for it. And then in 10 years, it'll be worth nothing. Really? Now, imagine people thought this way. How much is that brand new Hyundai? 50 grand. No, it's not. What are your costs? And I don't mean gasoline and brake pads. I don't mean that kind of cost. I mean, you are not buying a car. You're buying a loan. The car comes with the loan. So, you put some money down, you pay some taxes, you pay monthly fees, right? And it's amortized so that you pay a monthly fee, and at the end of the 5 years, 6 years, 7 years, whatever, you owe nothing. What's the total cost of the loan? Call Lee if they only gave you that number. $75,000. You're like, for a Hyundai Sonata? Yeah, the cheap one. $75,000. Yeah. And by the way, as soon as you buy it, the day you buy it, it's going to be worth $40,000. And you're committing to paying $75,000. That's where I'm pulling my hair out. The average American right now is doing that, according to the Fed. The all-time high of car debts related to car loans. You are willing to pay, you meaning the average American, $75,000 for a car on your first day of ownership that's worth $40,000 because of instant depreciation as soon as you bought it. And 1 year later, $30,000. And 1 year later, $15,000. And you still have a $60,000 loan. Oh my God. Huh? God save America. So I'm trying to get you smart with money, guys. Trying to get you smart with money. I hope you don't mind me talking money. I love money. I'm a capitalist. I have a degree in economics and another degree in finance. I love money. But I love what money does for you. If you use money correctly, it increases your net worth. It provides comfort and shelter to your loved ones. It increases productivity of society. It brings self-worth. It gives you power. It gives you pleasure. It gives you opportunity. It gives you options. Money grows. Did you know that? Money grows like rabbits. Money makes more money. If you put it to productive use, money makes more money. Then you have more money, which makes more money. Then you have more money, making more money, making more money. That's called wealth. Okay? Matrix says, no, you love power, not money. Well, power is different. Power is different. Power is different. I understand what you're saying, and it's related. I like respect and loyalty, which is a form of power, I suppose. But when you have a charity that you like, power sometimes is helpful, but money is better. It's just easier. Power might get you into a nightclub where you could just slip the bouncer $100 and you're in. Money is just easier than power, and it's easier to measure. How much power do you have? Well, I don't know. Let's go to the polls. Hillary Clinton's definitely going to win. She has all the power. Power is hard to measure. Money is just easy. How much money do you have? I don't know. Let's take a look. Let's talk. Let's see. 100, 200, 300, 400, 500, 600, 700. 800, 900, 1,000, 1,100. I have $1,100. How much power do I have? Probably none. But I can buy lunch, make you happy, and now you're my friend. Is that power? Maybe. Huh? Or I can convert something. I can sell this for money. Can I sell that for power? You like a Panerai? How much power will you give me for Panerai? Well, maybe that just gave me power. Oh, Wayne, he has a Panerai. He's a powerful dude. Maybe that just got me power. Maybe. But I'd rather have money. Okay? This is stupid. This is stupid. You see this? Look at this. You see the pins come out. Can you see that? They unwind themselves. You see this pen? Look at even this pin. Look at that pin. The pins come out. The pins come out. And they scratch your arm. But you can't use a regular screwdriver because they're made out of ceramic, not steel. It's dumb. What a dumb thing to do with your money. You know what? Just give me money because I can convert this to whatever I want. You want lunch? You want gas? You want to go to a trip? Do you want to see Paris? Money is easier. Oh, you're my friend and you're hungry? Here's some money. Oh, right? Here's some more money, right? And it's easier. It's a unit of account. Power is difficult. But that unit of account is important. Is it a medium of exchange? For sure. So now I have my account. How much money do I have? Okay. Then how much does that money buy? That's that, right? That's that store of value idea. So I don't want to have a bunch of Panerais when I'm too old to work, but a whole bunch of US dollars are pretty good. As long as I can convert it into something useful, right? Like that oxygen tank up my nose, right? Like, well, I can't breathe. How much money will it cost to fix that? Oh, well, $3,000 to buy a portable air tank that you can shove hoses up your nose. Okay, great. Great. Do you have any better ones? What's the Cadillac of oxygen tanks? Oh, well, we have the XP3000, but it's $9,000 for that thing, but it's super light and it gives you purified oxygen better than, blah, 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 blah. All right, $9,000. I want the best oxygen tank in the world. Done. Okay? So that's what money can do. it's the opportunity, it's comfort. Okay, and when you're young, it's opportunity. When you're old, it's comfort. Both are really desirable. When a friend is in need, not a problem. Hey man, I'm hungry. Here, eat my watch. That doesn't work. Okay? Matrix says money is a function of power. Yes and no. Like, I'm not disagreeing with you, but it's turning it around in a way that doesn't support my argument. That's not what I mean, but I know what you mean, and I'm not saying no, but there's something else to it. Yes, but perception will also do it. Okay? Regil says, dude, more money is bad because it will cause inflation. Yes, I agree with that. Okay? But I didn't print this. Okay? So more money, that comes from the Treasury. More credit comes from the Fed. But based on the amount of money, see, if I had all the money and nobody else had any money, we wouldn't have inflation. So that, Regil, like, the more money I have doesn't create inflation. In fact, wealthy people don't spend their money. Do you understand that? They invest their money. So, if the vast majority of Americans got their stimulus checks from the White House, I'm talking stimulus checks here. The vast majority, according to the CEO of Bank of America, spent their money on food and beverage. Lots of others gambled it on meme stocks and cryptocurrencies, so on and so forth. And so the CEO of Bank of America tracked how many people had less than $5,000 in their account, got more than $5,000 in their account, and then went back to less than $5,000. So they had no money, then they got some money from the government, and then back to no money, right? So almost everybody in that category has no money anymore. That's where inflation comes from. Wealthy people got their stimulus checks. What did they do with it? Nothing. They didn't need it. It just went in. We almost it was weird, by the way. One time we got a check, but one time it just went into our account. There are probably people in the United States that didn't even notice that $5,000 or whatever got put into their account. It just happened. Boom, it's there. Oh, whatever. Okay, so wealthy people don't spend it, and it's a form of removing it from the economy. Now, maybe it got put into a mutual fund and all that kind of stuff, but that's why the stock market went up and up and up and up, and Peloton was worth $1 trillion because of all that fake money. Regil says, so what's the point of collecting all the money when you die in the end? I just explained it. You sleep in a comfortable bed. You live in a safe neighborhood. Your children go to a good school and are cared for when you're gone. You can take care of your loved ones. Money is wonderful. It's productive. What's the point of collecting all that money? I don't collect money. Okay? I don't collect money. Cash is trash. I convert my money into assets. I don't have a lot of money, but I have assets. Okay? Do you know what my monthly car payment is? None. Why? Because I'm rich? No, because I'm smart. Right? Cool. So, I'm not trying to say some people are dumb. If you're in that situation, it is what it is. I can't do anything about it. But I am trying to shed light on what money is, the mathematics of money, the importance of money. Sometimes we're talking about the economy. Sometimes we're talking about finance. Sometimes we're talking about models, economic models, like yesterday and the day before. I'm trying to help you predict the future. I'm trying to help you protect your money. I'm trying to get you to lower your risk. Okay? The stock market's falling. Somebody asked me, hey, you're short. Yeah, I am short. 5'10", but I'm still short. The stock market, at least. And what if it goes up? Well, I'm hedged. That's what a hedge is, by the way. If the stock market goes down, I make money. If the stock market goes up, I make money. That's what a hedge is. Okay? But anyways, I'm not here to pick fights. I got nothing but love and respect for you. I'm not here to belittle people. That's not what I'm saying. I'm saying there are many Americans that either don't have a choice or just don't understand. And what I'm trying to bring to the table here is an understanding so that you can maybe make better choices. And when I say you, or us, or we, or Americans, I'm talking about the aggregate. I'm talking about a report that the Federal Reserve Bank released yesterday. And so maybe part of that message is, wait, what? Wayne's reading Fed reports released yesterday about debt levels and consumer spending and borrowing? Yeah, that's part of the message, isn't it? But I'm also trying to show that, and I hope tone of voice doesn't make it sound bad, but I love what we do. I'm passionate about our discussions and about our thought processes of making wise investments. Okay? I even wore a tie for you and cufflinks because I'm a badass. But also I love money. And if you think money and greed are the same thing, I would disagree. If you think money is bad, I wholeheartedly disagree with you. If you think money makes you a bad person, I absolutely, totally disagree with you. I think money is liberating. I think money is helpful and productive. I think money makes the world a better place. Yeah, I do. So why don't we work together every single day for 20 years on how to get our mind right about money and then grow our worth? I'm not interested. Money is stupid. Wealth is important because what the difference between money, like rich and wealth, rich people have a bunch of money. And of course, they go out and spend it. Fast cars, big houses, right? That kind of stuff. Great. But then you look at their retirement account and they ain't got jack. Wealth is different. That's where you take your money and you invest it in ways that your money makes money. And then your money makes money, makes money. And then your money makes money, makes money, makes money, and to the point where your money makes more money than you do. When you cross that line, when your money makes more money than you, how do you make money? You invest time, right? You're human capital. You're like a machine. You go to work, you do some level of productivity, a little song and dance, somebody throws you some pennies, and then you go home to watch Dancing with the Stars and drink a full bottle of Chardonnay and then quietly cry in the shower. Right? Living a quiet life of desperation. Okay? Hey, we all do it. Okay? But one day, all the money you've invested makes more money than you make by going to work. So let's say the number is $100,000 a year. Let's say you go to your stupid job, working at your stupid company with your stupid boss, okay? And they pay you $100,000 a year for that. If you invest your excess capital, which means don't live in a McMansion, don't waste $75,000 on a car loan, okay? Dude, be frugal, be smart with your money. Stay small, stay humble, right? You take as much of that excess and you invest it as possible. And let's say in 10 or 15 years, your money makes $100,000 a year and you make $100,000 a year. At some point, that's when you're now wealthy. You go to work because you choose to, because you still want to convert your time into money so you can convert your money into additional wealth by investing that into productive capital. By the time you're old, money won't exist. You won't need it. Meaning you have more than enough. Oh, I'd sure like to go to Paris one more time. Let's go. You're not like, how much? Well, how much is the air? Can we get a deal on the airline ticket? What do you care? Okay. So you got to get to a point where your money grows faster than you can make it. And you can do that. You can do that. And you will be able to take care of your loved ones. And you'll be convinced at the end of your life, money is good. Okay? Money can't buy you happiness, but it could buy you goodness. You want to be good to somebody or something, you can be good. Okay? Money will buy you good. That's cool, because money is good. Peace on earth, may the pips be with you. May your profits be above average. Hey, if you're in my day trading group, I'll see you later at 4 p.m. Have a wonderful day. Go get 'em.